I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, let's kick it off by going, what's on the top of your mind?
I think people we're back in end of the world mode. I think a lot of people feel like you have to sell and get out. Ray Dalio note, which kind of draws the unfortunate analogy to the 30s in Europe, kind of thing where it's just that you used to sell everything and go buy gold. I'm not a subscriber to that. I'm looking for opportunities. I've been waiting for, say, the drug stocks to come down. A stock like Merck, which is doing incredibly well, just got another new key true ruling that's positive, and I think that that's kind of stuff we haven't even looked at yet. We're buying a little, saved for what we're doing. Actually, we're doing some buying, but when I get the end of the world, I tend to think that the end of the worlders last for 2 to 3 days, and then the selling exhausts itself. But understand we are in end of the world mode. Now, someone on Twitter is going to say, Jim says it's the end of the world. Now, I listen, you morons who say that. What I'm saying is that's how the market's reacting. In the same way that I didn't say that I fear Elizabeth Warren. I said Wall Streeters fear Elizabeth Warren. So what's top of mind for me is that this is a period of max hatred for me on Twitter because I buried everybody. That's what people say, even though we have the highest cash position we had in ages, and we've been telling you to sell. So if we've been telling you to sell for weeks, ever since the oscillator hit +8, we've been negative. Now that the oscillator is going to be negative, we're going more positive. There's just an ebb and flow, and right now is a max moment where I'm reading big strategists who say it's the end of the world. Seeing people interpreting everything as incredibly negative, and that tells me, okay, look, yes, indeed, we have a Democratic candidate front-runner and number 2 front-runner who are in favor of confiscation. It's okay, that's what that's what it is, wealth tax confiscation. And we have a president who's being impeached by the Democrats and is being hamstrung by a tight Fed. It's not a good moment, but sometimes things work out for the best. It was a bad moment when I started, when the Dow was at 1,000, and it's still bad. And yet it went to 29,000. So people want to think it's bad, and it's been bad ever since I got in. It's been bad ever since 1779 when I first bought my first stock, and it's been bad since 91, since 81 when I started managing money professionally. It's never been good. It's always been bad. I want you to think about that. It's always been bad, and yet look where it went. So that's top of mind for me, is that it's always been bad. And that is an unrelenting theme from the day I bought my first stock. It's always been bad. It's never been good. And that was reinforced by 2000 and reinforced, of course, by 2009. But the top of mind for me is it's always been bad. And the people who have hated it are out in force saying, who am I to have liked it? And I come back and say, I guess I could be as poor as a church mouse, which I was when I first bought stocks, and I could have remained that way, and I chose not to. I decided that everybody who was negative in the 39 years I've been doing this might be wrong, and that it was worth it to try to make some money. And I don't regret that I did, because I did.
Now, this current end-of-the-world scenario that we're in right now started yesterday because of the ISM manufacturing data. We're down about 349 at 10:04 a.m.
Yeah, I mean, look, I always say let them sell what they have to sell. I never say buy. I say look. I mean, we haven't bought anything yet. We're buying. Today's the first day they're actually committing our hard-earned cash position that we've been taking. I've been waiting for this. And see, now when it's happening, you can't suddenly say, you know what, we got to start selling. When we were over the portfolio this morning, I got to a particular stock, and I said, maybe we should sell some. And I said, oops, I forgot. That's not our goal right now. We've been selling and selling and selling. Now we have to look to buy because everybody else is now selling. And I have a piece today about Starbucks in Real Money. Starbucks has been straight down ever since they did a September 3rd soliloquy at Goldman Sachs. The CFO said some things that were contrary to what Kevin Johnson said on Mad Money just the week before, and the stock's been straight down. And do I hate Starbucks at 85? Well, I think at 98, but at 85, you better start thinking about liking it. So as stocks go down, they do get cheaper. There are a lot of stocks that I think are really for sale that makes sense to me, and we're going to be picking when we feel like it's down, say, 500. That's what we're going to do.
Is this current market scenario that we're in right now, are we ringing the recession bells, or?
Yeah, I mean, everyone just thinks that the mindset of the market is that no matter how strong the domestic economy is, it has to, tariffs have to make it so it's not going to be strong. Any negative data is viewed as extremely negative. Any positive data is overlooked. PayPal gets permission to be in China, which American Express, MasterCard, and Visa are desperate to get. Nobody cares. Merck gets more Keytruda go-aheads. Nobody cares. I mean, we're just in a moment right now where nobody cares about anything that's good. And when that happens, you've got to let the sellers go on. Now, remember, we have a lot of new supply because of all these stupid IPOs that the venture capitalists forced on us, because they don't sit there and think, oh, my God, we're going to hurt the market. They're just trying to get liquidity, and their get liquidity is our bad. The brokers aren't going to stand in the way because they need to make the quarter. So the stuff gets pumped out, Peloton-like. They actually make it exciting to people and really just gaff them. And that's just the way it is. And those who would argue with that depiction are people who are children. That's the way it's been. They're young people. They don't understand. And I've seen it time and time again, and it's the benefit of age and experience.
Jim, I want to switch gears because I do want to ask you about Stitch Fix, which is a real money stock of the day.
Right.
Now, with Stitch Fix, if I'm an investor holding on to the stock, what should I be doing with it right now?
Well, I don't think you can sell it down here. I actually thought that what they did was say, look, if we invest, we make money on who we invest on. That is true. But everything that was said on that conference call, if it had been said in April, the stock would have gone up. Now nobody wants to hear it. They just want to hear that Katrina Lake is making a fortune and is about to pay a dividend and do a buyback. And that's not what you're going to get. You're getting a growth stock. And in a good growth stock, you want to spend to grow faster. And that's what she's doing. And are the margins under pressure? Well, all the price target people would seem to indicate the margins are under pressure. They did some change in stock-based compensation. If they backed it out and made the numbers so-called look better than they are, I come back and say, I don't see the opportunity yet. We don't see the opportunity yet because everybody hates everything. So why should I say, hey, don't hate it? I say let them sell. Who's ever in Stitch Fix is trying to get out because they thought that Stitch Fix was going to begin to start making fortunes. And Katrina Lake wants to win the category. She wants to keep people out. She's a brilliant person, and I think that her strategy is the right one for the company. Is it the right one for the stock? That's where we are in crunch time. A lot of companies are doing the right thing for the company, but that's necessarily not the right thing for the stock. And there's a gulf that's developing, and that gulf is being filled by sellers.
Jim, based on Stitch Fix's earnings, because they had a forecast that just did not appease investors.
It was like, geez, I mean, look, they see a lot of opportunity. And the opportunity is not false. I mean, this is a gigantic apparel industry. You could say, well, they're doing some of these things direct to consumer that are not part of their model. But she's demonstrated that when you bring people in, they start spending. She's looking at each vintage and seeing how much a vintage spends. She's doing classic good investing for a company. And for that, she's getting her head handed to her. And what she's saying is, I don't care. I am not going to invest as if the future doesn't matter. I am going to take a long-term view. And if you don't like it, sell. Now, of course, she didn't say the latter, but that's how you have to read into it. Now, I mean, in April, we wanted that. Now we don't. And the we is made up of people who are very short-term oriented, but, she doesn't want you if you're short-term oriented. And I don't think there's anything wrong with that. I would be less proud of her if she said, you know what, it's time to stop spending and harvest. It's not. They want to be big. And I look at a Macy's, and Macy's stopped spending. Macy's just bought back stock. Macy's versus Stitch Fix, okay? Macy's, what, yields 10? Nobody wants that, right? They don't grow. People want her to go do what Macy's did. But look at Macy's. So one's a growth stock, it's a hyper growth stock, and one is a shrink stock. And she doesn't want to shrink. And for that, she's being punished. And I say, hey, you know what? Punish away. But understand what she's doing is right for the company. But right now, it's not necessarily right for the stock. And they're two different things.
And just for investors watching, he means the CEO, Katrina Lake, correct?
Katrina Lake, it's the stock of the day. So you should go to the stock of the day. It's when we do blanket coverage. And proud of that. And I just have to tell you that if you're selling it, please read the conference call, read the letter, go to the website. These will take you an hour and a half. That's how long it took me, about an hour and a half, from 4:15 to 6 when I finished. After reading it again last night, so it probably took me a couple hours. I think you can do it faster than I did, and in trying to understand what happened here. And I just think that you have to understand not just the company, but the stock. And there are people who are going to say, you gaffed me in Stitch Fix. I wasn't even recommending it. But that's where we are right now on Twitter. Like, Cramer, you got me. You told me to buy all the cannabis stocks. No. I said, there's one cannabis stock to buy. If you wanted one, which we didn't own for Action Alerts. These are all people who don't subscribe. I don't want to meander too much, but I'm just saying that when I get a lot of hate tweets for things that I didn't do, like tell you to buy United National Foods, UNFI, that's closer to a bottom than you realize. And you can gauge a bottom by how much hatred there is in Twitter, particularly when it's hatred for things I didn't do.
Now, Jim, before we head on over to Action Alerts Plus, I've got one quick question for you.
Yeah.
And it's an investing education question because I think that we need to give these investors some knowledge on how to look at forecasts from companies. So, Jim, when you look at forecasts and they seem negative and you want to sell, what's a one number that you look for?
Okay, I look for gross margins. I mean, if they say, listen, we see margin compression, you have to sell, because what that says is there's more competition coming in, or that they have too much inventory, or that there's actually a slowing in demand. That's the number. You want to see margin compression. If you look at Stitch Fix, one of the notes says that there's going to be margin compression coming in. That's a sign that they're worried about demand and worried about inventory. Inventory did spike there. They have tariff issues. But they said they wanted that level of inventory. But if you look at margin compression, you've got it.
All right, Jim, thanks for joining.
Yeah, I mean, look, when there's panic, thank you, Karen Cramer, you just go ice.
You just don't panic.
Yeah, I spoke to her yesterday. I said, you doing any buy-in? I'm not allowed to know what she's doing. We're separate now for years. But I talked to her because she's my friend. And I said, what are you doing? And she said, nothing. Sitting on my hands. And I said, well, come on, it's down a lot. She said, go have a cocktail. It's like 12 o'clock. She was in New Orleans. She was at that absinthe bar, which I love so much in New Orleans. My daughter went to Tulane. And, yeah, she's I don't like it. That was funny because, like, okay, there you go, seasoned trader. I don't like it. And again, for disclosure purposes, because everyone's always picking on me, I don't know what she's going to buy. I don't know what she's going to do. But I do like to find out if she's liking it or not. My life is an open book and a fishbowl, but I always like to check in with her because she has a very good handle. And she said, no, go have a cocktail. So there you go. Go have a cocktail.
All right, Jim, thank you for that sage knowledge. And for all of you watching on TheStreet.com or on Facebook Live, we are now heading over to Action Alerts Plus on our daily rundown show where I really want to pick your mind about PepsiCo, but we're going to get there.
Oh, sure.
All right, so we'll be over on ActionAlertsPlus.com. I'm Catherine Ross, and I'll see you tomorrow.